morning and welcome. You're watching Market Cafe on ET Now. That's Ankita Saxena and with me is Harsh Saita. Let's quickly take you through all that's happening. To start off with global markets on Friday, where did markets close, as well as what are the key leading indicators at the start of trade today. So we'll focus on those couple of things over the next few minutes. But after that, we'll go and we'll give you an update on all that's happening with regard to business news globally and in India and corporate news all through the weekend. So quickly, a quick catch up on global markets. Ankita, take us through this. Good morning.
Good morning to you, Harsh, and good morning to everyone. It's the start of the new week, but Friday did see a sell-off in the US markets because this debt ceiling negotiations were halted for a bit, and that weighed down the markets, and the markets got really jittery on Friday. So US markets fell as the GOP negotiations halted the ongoing debt ceiling negotiations. Now, Friday's losses were, however, kept in check after the Federal Reserve Chairman Jerome Powell said that interest rates may not have to rise as much as expected to quell inflation. Now, Dow Jones was down 102 points, S&P 500 was down 0.1%, and Nasdaq Composite fell 0.2% in trade. Now, for the week, all the three major averages were capped with gains. The S&P 500 rose more than 1.5%. The Nasdaq Composite gained 3%. It was the best weekly performance since March for both the indices. The Dow, however, added 0.3% last week. Now, if you look at the European markets were bucking the trend. They ended the session higher on Friday as the US debt ceiling talks boosted investor sentiments. The FTSE was up 0.1%, DAX was up more than 0.5%, and CSE was also up more than 0.5% in trade. So a mixed global handover coming in, Harsh. And as I can see, as of now, the US futures are also in the red, very flattish, but in the red.
Absolutely, Ankita. So you're seeing a negative indicator with regard to the US futures as well. So a slightly negative start. But let's quickly move on to what's happening with oil. You have all these pressure points coming in together, very well put by Ankita. You have one, the debt ceiling. You have second, the Federal Reserve Chairman's comments, which continue to indicate a slight bit of softness, a slight bit of dovishness, but at the same time, he continues to flag off that inflation has not completely gone away. So that's one concern which markets will continue to be concerned about. The other piece, of course, is the debt ceiling, and that is also, in case of a default, that could lead to several problems within the global economy. And that's keeping crude oil in check at the moment. 71.5 below that, $71.5 a barrel is currently where the WTI is trading at, and we're looking at a Brent of just above Brent price of just above $75 a barrel. So currently oil under pressure on the back of a lot of negatives to be factored in. At least that's the current state of affairs. Let's quickly move on what are the key events to watch, Ankita.
That's correct. But before that, the biggest event that happened was on Friday. Now, just 11 days to go before one of the largest economies in the world defaults on the debt payments, and the date is 1st of June, as Janet Yellen had mentioned. The US President Joe Biden and House Speaker McCarthy will resume the negotiations over the debt ceiling later today. Over the weekend, Joe Biden said that the Republicans need to move from their extreme positions. It's time for Republicans to accept that there is no bipartisan deal to be made solely on their partisan terms, he added.
With the US macros, the Federal Reserve Chairman Jerome Powell noted that initiatives used to deal with problems at mid-sized banks have mostly halted worst-case scenarios from transpiring, even as he sounded optimistic on not having to rate hikes as much as expected. He warned of further economic risks that could stem from the tech sector.
And meanwhile, the US president also said he expected ties with China to improve shortly after a spat over an alleged spy balloon earlier this year derailed relations. Biden said that US's move to shoot down a silly balloon that was carrying 2 freight cars worth of spying equipment changed the dynamics after his meeting with President Xi Jinping last year. Now, he added that his administration was considering whether to lift sanctions on Chinese Defense Minister Li Shangfu. Let's listen in to what he had to say.
The one China policy, which says everybody kind of forgets. Now, I mean, you all know, but the public kind of forgets that it says that neither country, China or Taiwan, neither territory can independently declare what they're going to do. Period. There has to be a mutually agreed to outcome. And so we're sticking by that. We're not going to tell China what they can do. We made it clear that we don't expect Taiwan to independently declare independence either. But in the meantime, we're going to continue to put Taiwan in a position that they can defend themselves. And there is clear understanding among most of our allies that, in fact, if China were to act unilaterally, there would be a response.
Right. Tough statements there, but let's quickly move on. Among other important news that we are tracking this morning, social media platform Instagram is back up and running. This is after technical glitches disrupted services for thousands of users late last night. The outage was spread across countries like US, Canada, as well as Britain.
And Greece's Conservative Prime Minister Kyriakos Mitsotakis has won national elections. Hailing his party's big victory as a political earthquake, added that he would want another election win to seek absolute majority that would then allow the party to govern alone.
Right, and speaking at the G7 summit in Japan, Ukrainian President Volodymyr Zelensky insisted that the East Ukrainian city of Bakhmut is not occupied by Russia. This after a Moscow-backed mercenary group had claimed control.
After the three-day G7 summit in Hiroshima concluded, PM Modi took to his Twitter and expressed his gratitude to PM Kishida and the people of Japan for their warm welcome and hospitality during his stay. On the last day, PM held bilateral talks with British counterpart Rishi Sunak and Brazilian President Lula da Silva. Sunak and Modi reviewed their comprehensive strategic partnership, including taking stock of progress in India-UK FTA negotiations. The focus areas included trade and investment, science and technology, and higher education. The Prime Minister also visited the Peace Memorial Museum and paid floral tributes to those who lost their lives in the atomic bombings.
Right, and right, we're all set to speak about after completing the successful visit to Japan. He attended the G7 summit. Prime Minister Narendra Modi is now in Papua New Guinea as part of his three-nation visit. Upon arrival, PM Modi received a rousing welcome in the country from the Prime Minister James Marape, who greeted PM Modi at the airport and even touched his feet to show respect.
And stay tuned for an exclusive interaction with specialty chemicals major Aether Industries as we get a sneak peek into their manufacturing plant in Surat. The company is enhancing its R&D capabilities to becoming more resilient. Let's find out how.
And some potential risk also, because your 70% of the revenue comes from your top 20 customers. Is there a concentration risk? Have you mitigated that?
Yes, we have already mitigated that risk by adding new products and new customers. We have added more than 30 customers over the last 2 quarters itself. So it's quite interesting, and we are trying to grow more customers and adding more customers into our base.
I see an intense capacity unit. I barely can understand what all it is, but I'm sure the way the pace the specialty chemical industry is growing. It's immense. It's more than 11%, which is assumed
Right.
by the industry experts. But then, since your major of the portfolio is towards pharma sector,
Right.
you have a concentration towards oil and gas and agro, plus to some part of photography also. But then, isn't that sluggish demand from domestic pharma industry a concern?
Yes, the overall pharma sector was having a demand constraint, and so to mitigate that risk, what we have is we have increased the portfolio of agro. And as per March ending 2023, we are only 45% as pharma now
Okay.
and 35% approximately as agro. So we're increasing and balancing out both of this. Also, what we are increasing is material science division, a segment which is more important to us now, and that is how we are looking at it. So we want the equal distribution in future on all these three segments
Sure.
respectively.
How much part of your supply chain comes from China or other overseas markets? Because I see that there are not long-term contracts with your suppliers as far. Are there any supply chain issues because of China's economy keep on opening, closing, partially opening? Are there some bottlenecks there?
So we have long-term contracts with Europe, Japan, but however we do not do long-term contracts with China. Our focus on having raw materials from China is very less, because that is our USP, that we give product which is free from supply chain of China. So 13% of our total imports is from China. As we have no competition in India, we think that it gives us more advantage against China. Basically, when we say that we have a supply chain free from China, everybody would like to order from India, understanding that the supply will not be disrupted of Aether.
Tell us something about your new pipeline also, new client acquisition. There were some inquiries from Europe also. If you could just throw some light there also.
Yes, so we have added more than 30 customers in the last 2-3 quarters, which are in the field of pharma, agro, material science. And so it has been very interesting when you have a child, there was already a China plus one condition over here. You have now Europe plus one condition. So the strategy is playing in the favor of India, and we are getting more and more inquiries.
Right, that's the management of Aether Industries. Stay tuned on ET Now for that complete exclusive. But with that, we'll slip into a very short break. More on the other side, so do stay tuned. Welcome back. You're watching Market Cafe on ET Now. Let's quickly move on and look at what's happening in Asian markets, slightly more on the domestic front. Switching the lens, the Nikkei is really doing nothing but is still in positive territory nonetheless. So some amount of positive bias coming in from the Japanese index. We're also looking at the Kospi, which is up around 0.4%, some positivity there. It also seems that US debt ceiling talks seem to, or rather there's an expectation that they will resume. So that is also adding to a bit of the positivity, 0.25% higher for the Hang Seng. The Shanghai as well, positive but just mildly positive, 0.1% higher, just a bias there. And you're looking at the SX 200, which is the only Asian index in the red at the moment. Of course, the SGX Nifty also is down around 0.1% or thereabouts, so slight negative bias coming in there as well. Ankita.
All right, so negative bias coming in there, and so are the US futures in the negative, though pretty flattish, but in the red, hinting towards a rather negative start. Moving on, Pankaj Tibrewal, who's the Senior VP and Fund Manager, Equity Kotak Mutual Fund, has seen some good sequential recovery in the BFSI segment. Now, he also has been playing the manufacturing theme via cap good stocks. Listen into what he had to say.
Markets are slave of earnings from medium to long term. In the short term, liquidity sentiment can play their own role. So it's very important for us to decode the earnings season which is going on. Till yesterday, Nikuchbhai, about 294 companies out of the NSE 500 companies have reported their numbers. And some interesting trends are to be watched out. Out of these 294 companies, 63 are BFSI companies and 231 companies are non-banking and financial services companies. In the first 9 months, December ending, we saw a huge pressure on the non-BFSI space because margins were under pressure. This quarter, there is a very interesting trend that we have seen a quarter-on-quarter strong recovery. And my sense is that margins are at 8-quarter high. And non-BFSI space has shown 3.3% earnings growth, the 231 companies. In the first 9 months, the BFSI space led the entire show with almost 50% earnings growth. That is seeing moderation, and the BFSI 63 companies have shown about 21% earnings growth. So on an aggregate basis, we have seen 9% earnings growth, which is better than the first 9 months, which we saw. So there is some momentum which is being seen on the non-BFSI space as far as margin expansion is concerned. Coming to Nifty companies, about 35 companies have reported, and the earnings growth is about 14%, which is slightly better than what the street was expecting. And the entire show and the growth is led by BFSI as well as autos to a certain extent. And in many pockets, we have seen some of the oil and gas companies also delivering strong numbers. So I believe that compared to what we saw in the first 9 months, there has been some improvement across the broader space. And I think market has started to reflect that. The second part is on liquidity. I think market has been surprised by the comeback of FIs in a very strong way. Also, we believe that the next 6 to 12 months would be very strong from FI flow perspective, because what we are experiencing as a fund house is that over the last few months, many new FIs whom we have not seen, they are looking and doing their homework on a country-specific allocation, which is India. And I think over a period of time, if market remains in a consolidation phase, valuations have corrected over the last 18 months, it will give a good entry point to a lot of investors who are looking at India specifically from a longer term perspective. So from a FI flow perspective, we are not so negative. We believe that April could be a curtain raiser for the next 12 to 18 months from a FI perspective. Domestic flows continues to be strong. And also don't forget, over the last 4 months, we saw the dollar index sliding down from 113 to 102. And there is a negative opposite inverse correlation of dollar index versus Indian markets. And whenever we have seen dollar index slipping down, actually it bodes well for the Indian markets, which has been the case over the last 1.5 months. So our overall view is that in the next 6 months, whatever bad news needs to come out, either in form of monsoon news, global volatility, US debt ceiling, US interest rates going for a long pause, all those things will play out. And I think the second half of the fiscal year could come out as very strong. And this next 6 months, what we are advising investors is
It's a very interesting take coming in from Pankaj Tibrewal there. But with that, we'll slip into a short break. We'll go more domestic on the other side, and then we'll go company specific. So do stay tuned.
Welcome back. You're watching Market Cafe. Moving on, the Reserve Bank of India has decided to withdraw the 2,000 rupee denomination banknotes from circulation. Now, the RBI circular says that the exchange must be done by 30th of September and only 20,000 rupees will be exchanged at a time, but there's no limit on depositing the notes in the bank account. Now, for now, the notes remain a legal tender. But this withdrawal has raised a lot of queries. My colleague Ankur Mishra is standing by to decode all the key questions. Take it away, Ankur.
Yes, there is a lot of myth which has been spread about this withdrawal of rupees 2,000 note, and one of them has been a comparison with demonetization. Now, if you remember, When demonetization was announced, it was clearly mentioned that after the midnight, the 500 and 1000 rupee note will not be a legal tender. But if you see the announcement which has been made on Friday, RBI has clearly said that it will continue as legal tender, meaning your note is holding the value. Now, what are the other facts? The important fact which you need to know is that there is no restriction on depositing your money, which was the case earlier as well. There is only limit which is set up for exchange. And what is that limit? That limit is rupees 20,000 for if you are depositing in the bank branch, and if you are depositing through the bank channels, meaning BCs and all, that limit is just 2 notes, that is rupees 4,000. Apart from that, now the question arises that why this kind of decision was taken. Now, this decision was taken as per RBI, as per the clean policy, the clean note policy, and this was done because in last 4 to 5 years, the note has not been printed. And if you talk about the numbers, only 10.8% of currency is in rupees 2000 note. The expectation is that this all money will come back till 30th of September, which is the deadline till when banks will be accepting this money. Now, what happens after September 30? And that is a question which everybody was asking. What happens that if I forget to deposit that money, if any of the note is lying in my drawer or something, you have to exchange that note after the deadline with RBI. Banks will not be involved, but again your note will hold that value and you can exchange it via Reserve Bank of India. The expectation is that that closer to the deadline there will be a call which will be taken on extending that deadline or not. But for now, the only thing you need to keep in mind is do not go for any kind of myth. Only subscribe to the official information, and that too with your bank.
Right, that's Ankur Mishra giving us all the lowdown with regard to what's happening with the 2000 rupee note. It's, of course, the big news at the moment. But in an exclusive conversation with ET Now, Finance Secretary TV Somanathan said that the 2000 rupee note had run its course and the decision to withdraw it was a necessary and desirable move by the RBI. Listen into what he said.
Well, first of all, this is a move by the Reserve Bank, not by the government. And secondly, these are things which need to be done in normal times when there's normalcy in the economy. There is now normalcy in the economy. We are growing at a reasonable pace. Inflation is under control. So this is the time when necessary steps like this, where we can choose the timing, are to be taken. And this is a step which is useful because it reduces the use of these high denomination notes, which internationally are known to be prone to various problems. So these were necessary at a particular point of time, and they have had their use. We no longer need them for the functioning of the economy. They are hardly ever used in transactions, and we have a very strong increase in digital payments. So the transactional need for 2000 rupee notes no longer exists. So it's an appropriate time at which to make this move. It's being made in a very calibrated and careful way, no disruptions. It remains legal tender, and it will be available for use, and it can be exchanged up to 30th September.
Secretary Somanathan, but the total currency under circulation in the 2000 rupee denomination has dramatically come down, and it was coming down in a very linear manner. So was this move really required?
I think it's a necessary and desirable move because it accelerates the exit of the 2000 rupee notes, especially those that are in storage and not used for transactional purposes. And, these notes, because there's been no printing from 2018-19, their quality has been deteriorating. And therefore, it's a necessary and desirable step.
Secretary Somanathan, the deadline given here is September, and about 10% of the total currency under circulation is in this 2000 rupee note. If Reserve Bank of India and other banks are not able to reach that number of 7-8% by the time the December deadline is there, could the deadline be extended?
that's a matter for the Reserve Bank to decide at the appropriate time. I am not in a position to comment on it.
Secretary Somnathan, when demonetization happened, the 1,000 rupee note was banned, the 2,000 rupees note was came into circulation. Could we be going back to another denomination of note, or it will only remain at 500?
To the best of my knowledge, it will only remain at 500.
Is there the whole purpose of demonetization? I'm taking the clock back, sir. Allow me to take the clock back. Was done to really kill the menace of black money in the system. Is there any evidence which government currently has that it also could have an impact on the black money in the system?
The demonetization did have a very positive effect on black money. It resulted in the discovery of a lot of information about non-tax paid monies, and the operation that was launched after that has been one of the causes of substantial growth in direct tax collections over the last few years. So it has been successful in its aim of reducing black money. In this particular case, what will its effect be is difficult to state in advance because it's a different kind of move. It remains legal tender and the exchange is permissible. However, I think any reduction in high denomination notes in any economy makes it less easy for illegal transactions and for black market transactions, black money transactions to happen. This is not an Indian phenomenon. This is a global phenomenon. Globally, high denomination notes like the 100 euro note or the $100 note are known to be prone to improper activities. So any reduction in the circulation of high denomination notes is desirable in the long run.
Can I also say that this is a firm endorsement which is in line with the Prime Minister's vision that the Indian economy is becoming much more digital, and now Indian economy, perhaps the currency and the circulation naturally will start coming down?
It's certainly a step in that direction, and as you can see, our payment systems are now very mature. Our digital payment systems are among the best in the world, and this is probably the only country where a vegetable seller or a vendor on the street accepts and makes electronic payments and is also able to access loans based on electronic receipts and payments. So the need for high denomination currency notes has declined drastically in the last few years, and that is definitely a success. And I would say it's also a success that has occurred partly because of demonetization. And this, therefore, is, yes, you're right. I mean, it does follow in the same direction.
When you say the government feels this is the right time to perhaps incorporate this move, can I request you to define what is right according to you?
What is right is a time when the economy is functioning normally with no abnormal events and no exogenous shocks, etc. So this is a very normal time. This is a good time to do it. It would not have been a good time to do it in COVID. It would not have been a good time to do it when the Ukraine war had broken out.
All right, moving on then, the Board of Reserve Bank of India has approved a dividend transfer of over 87,000 crores to the government for the year 2022 to 2023. The Finance Secretary T.V. Somnathan shared his take on the dividend announcement of the RBI. Listen in.
Sir, I'm surprised and also happy and delighted with the RBI dividend which was announced yesterday.
I'm not completely surprised. It is higher than last year, but of course, it is, it is always beneficial if revenues increase. But I don't anticipate the aggregate government revenue to increase. I think budget estimates in aggregate for non-tax revenues will probably remain correct.
Things are really looking up on GST tax fund, direct tax collection, RBI dividend. Looks like the year is going to be a year of full of good surprises for the government and for everybody.
I am not an astrologer, so I wouldn't predict anything. I hope you're right.
But mathematically, sir, it makes sense in way how things are moved.
Yes, so far it looks good, and I hope you are right.
Well, let's move on from that story. SEBI has come out with 2 consultation papers on IPOs and mutual funds. My colleague Ankur joins in. I'm going to break all of that down. Ankur.
two important consultation paper has been released on Saturday by Securities and Exchange Board of India, and one of them is about public issues. Now currently the timeline for listing of public issues is T+6. What SEBI is proposing now to reduce this timeline to T+3, and this SEBI believes is in the interest of not only issuers but also investors. The issuers will be benefited, of course, their listing will be done in reduced timeline, and if you talk about investors, they will have liquidity in a lesser period of time. There is another consultation paper which has been released by Securities and Exchange Board of India, and this is regarding mutual funds. Now SEBI has said that there should be surveillance mechanism for mutual funds, and this has come in the wake up of the activities which has been reported in recent past, and particularly regarding the Axis Mutual Fund case, where you would have seen that there was a fund manager, there were allegations that there was wrongdoing. Now in this consultation paper, SEBI has proposed that not only company is responsible for that, but the senior management should also be held accountable. So all in all, we need to see that how both of these consultation papers take the act of regulation, and finally when we can see the reduced IPO timelines and also a surveillance mechanism on mutual funds.
And the panel constituted by Supreme Court to oversee investigations into the Adani Group has said that it was not possible to conclude whether there has been regulatory failure regarding price manipulations. Now, the committee said that the prima facie there was no manipulation by the Adani Group. Now, senior advocate Mukund Rohatgi spoke with ET Now, sharing his comments on the Supreme Court appointed panel's report on the row. Here's an excerpt.
The Hindenburg Group is interested in short selling, and that is how they make their money. They have also said in this report that 6 entities, which include 4 foreign entities, had probably were privy to the report, and they sold the stock before 24th of March or on 24th of March, and then made a killing by buying it cheaper after the prices fell. The names of those entities have not been disclosed. Obviously, it is not Adani, but it is clear that it was a calculated attack on behalf of Hindenburg and some others concerned to create a stir and to create panic in the Indian market, because the share of Adani is bought and traded by millions of shareholders. That is what it was meant to do, and was meant for their own petty profits, which obviously some of them have made.
Right, with that we'll slip into a very short break. We'll, on the other side, take a look at what stocks you need to look out for, you need to keep on your radar in trade today.
Welcome back here, watching Market Cafe, and we will go more stock specific now. Zomato's losses have narrowed further in the fourth quarter. The food tech player remained adjusted EBITDA positive, excluding the quick commerce business of Blinkit. Now let's go across to my colleague Winnie, who's standing by to understand all the numbers. Take it away, Winnie.
So in terms of numbers that have come out from Zomato, we are seeing that the revenue, the growth over there, slight bit muted in terms of a miss coming in from what the street was expecting. But profitability front, surely much better than that, because losses are narrowing. Even the EBITDA losses, when you look at the operating performance, that has seen a bit of a narrowing coming in on a quarter-on-quarter basis as well. EBITDA losses came in at 225 crores versus an EBITDA loss of 366 crores last quarter. Losses 187 crores versus 346 crores last quarter. So considerable improvement in the profitability of the company. So that's one factor that the street is keeping an eye out on. Now overall, what the commentary is coming in from the business as well, what the management is highlighting, that business excluding quick commerce is adjusted EBITDA positive in Q4 FY23, and going forward in terms of target also what they're keeping, they're aiming to be positive both on the profit front as well as the adjusted EBITDA front on a consolidated basis in the next 4 quarters, within the next 4 quarters. So within 1 year, we could see that coming in for the company. Food delivery business, that adjusted EBITDA came in at 78 crores, which was better than what the street was expecting. Revenues saw a mild bit of a decline there, 1,530 crores versus 1,565 crores. That was mainly due to the demand slowdown that they witnessed in October to Jan. But since the month of February, they've started seeing green shoots coming in here and recovery coming in the food delivery business. Only the monthly transacting users, that saw a decline, but that was because of certain factors that are mentioned in the shareholder letter as well. Blinkit, when you look at it, that's seen a strong growth in terms of revenue as well. Hyperpop 2 is seeing a strong growth as well. So all in all, a good number coming in from Zomato, especially on the profitability front. And even Morgan Stanley maintaining an overweight rating, target price of 74 rupees. They see a strong outlook and profitability at a consolidated level, which is keeping them positive on the stock.
Thanks for all of that, Vinny. But we also have Ansh standing by. He's gone through all the brokerage notes that have come through. Ansh, talk to us about the key ones that you are looking at that are on your radar.
Hi. So Morgan Stanley maintains an overweight rating on delivery with a target price of 370. While the revenue slightly missed the estimate, the company's EBITDA turned positive, which was better than expected. The management is also optimistic about the business momentum continuing in FY24. Apart from that, watch out for JSW Steel. Morgan Stanley maintains an underweight rating on the stock with a target price of 580. The company reported good results at both standalone and subsidiary levels. The guidance for FY24 production and volume is also encouraging. Next stock in our radar is Motherson Sumi Wiring. Nomura maintains a buy rating on the stock and raises the target price from 62 to 64. The Q4 EBITDA is in line with the estimate. Also, the company is expected to drive the revenue growth through EV adoption. So keep an eye on the stocks. Back to you.
Just I have to say. What? All right, then we'll move on, and we have Vamakshi who's joining us with all the stocks that you need to keep on your radar. Vamakshi, tell us what are the stocks that we need to watch out for in today's trading session?
Absolutely. Let's first start off with all the earnings that did come in over the weekend and post-market hours on Friday. JSW Steel reporting a strong set of numbers. We did see the revenue inch up by almost 20% sequentially to 46,962 crores. Net profit has also gone up strongly from 474 crores to 3,741 crores. The EBITDA margin has also improved by around 530 basis points on a sequential basis. So very strong set of numbers from JSW Steel is what we're seeing. Welspun Enterprises, on the other hand, reported better than expectations, numbers that were better than expected. Revenue saw an uptick of almost 22% on a year-on-year basis, while net profit inched higher by almost 119% on a year-on-year basis, but the EBITDA margins declined. But nevertheless, they were better than what the street was expecting. Power Grid again come out with a good set of numbers. Revenue is up almost 14.8% on a year-on-year basis, while net profit stands at 4,320 crore, an uptick of almost 3.9% on a year-on-year basis. Margins have improved slightly, 150 basis points higher, while the commissioning for FY23 stood at almost 7,400 crores versus 20,700 crores that we saw last year. Now, Bandhan Bank, on the other hand, came out with an inline set of numbers. NII saw a downtick of almost 2.5%, while the PAT was down almost 57% on a year-on-year basis. PAT declined from 1,902 crore to 808 crores. Muthoot Finance, the company reported a mixed set of numbers. The NII was above estimates, and that was mainly on the back of the rebound that we saw in the gold loan AUM as well as higher NIMs. NII, however, came in up almost for 7.7%, while the PPOP as well as the PAT declined. Rather was below estimates due to higher employee expenses. The asset quality also deteriorated. Vedanta will also be in focus as the board meeting is set to happen today in order to consider the first interim dividend. Capri Global will also be on our radar as a proposal for fundraising will be considered today. Shreyas Shipping will also be in focus as it is expected to delist from exchanges. There is a meeting that is expected to happen. Dilip Buildcon will also be in focus as it has been declared as the L1 bidder for the tender that was floated by the Water Resource Department in the state of Madhya Pradesh. The project cost is almost 699 crores. And lastly, watch out for BEML. The company has emerged as the lowest bidder for the Bangalore Metro contract worth almost 3,200 crores. So watch out for these stocks.
Right, we will keep all of those stocks on our radar, Vamakshi. Thank you so much for that. Let's quickly move on. We had Zomato declare numbers, right? Let's quickly take you through what brokerages are suggesting with regard to some of those numbers. Well, Goldman Sachs continue to maintain a buy target price of 82. In fact, they've raised their target price and they believe that the improving growth and profit outlook is a positive. The Q4 print as well as commentary has beaten their expectations, and they see the consolidated profitability in 4 quarters to come through. So couple of positives coming through from Goldman Sachs. Morgan Stanley continues to maintain an overweight, target $74 a share. What they're suggesting is that while GOV and revenue was a miss with regard to the core business, they believe strong profitability has come through. In fact, profits have beaten expectations, or rather I would say the shrink in losses was far more than what they were expecting. Good growth as well as margin performance also is something that they are impressed by. So those couple of brokerages also having a bullish view on Zomato. Let's quickly move on though. Let's listen in to what the management had to say on their growth outlook. Management of Zomato, of course.
We've also mentioned in the letter that delivery cost has not changed much despite a lot of work we've done in the past because of various reasons. But going forward, we do expect that to change. So we're hoping that delivery cost, reduction in delivery cost will be more than what we've seen in the last year. And likewise, I think revenue should continue to increase. And we also expect our other variable cost to continue to come down as the efficiency in the business goes up in general. And also because of a little bit of operating leverage that we have in some of these things.
And moving on to another stock which was in focus, it was a strong 4th quarter for Divi's Labs. The pharma player beat revenue and EBITDA estimates. My colleague Shrishti joins in with all the highlights of the numbers. Over to you, Shrishti.
So decent set being reported by Divi's Lab this time around, followed by a positive management commentary. Talking about the numbers, the company reported a top line of 1951 crores, EBITDA as 488 crores, and sequentially we are seeing 100 basis point improvement in the EBITDA margin at 25%. The bottom line being reported at 321 crores, that's for almost a flat growth on a sequential basis. But if we look at the gross margins, they have actually improved 90 basis points sequentially at 57.6%. But on a YOY basis, there has been a major decline. And the company says that pre-COVID, they used to hold an inventory for 3 to 6 months. But now they are currently holding an inventory of 8 to 9 months. And that too, this inventory is at a higher cost. So going ahead in the near term, this high cost inventory is expected to impact them. But by the end of the financial year, they expect that the higher cost inventory should come down and the low cost inventory will help the margins of the company. On the other hand, the raw material prices are also coming down sequentially, is what the company highlighted. Onto the business front, the custom synthesis and the big pharma projects are progressing well, and the commercial production of the sartans have already begun and should be visible into the numbers at Q1 of FY24. And for the full year, they expect the numbers to grow in the double digit. They also gave an update on their Kakinada plant, where by the end of calendar year 24, that should get operational with the phase 1. So all of these updates coming in on the positive side with a decent set by Divi's Lab.
Right, Divi's Labs in focus on the back of earnings. Let's quickly move on though. The RBI governor is set to take stock of governance concerns at PSU banks. Sources say Governor Das will meet directors of PSU banks today to cover issues related to functionalities and ethics of banks, including supervisory expectations. Right, and heightened security in the valley ahead of the G20 meet. Authorities have issued an advisory for the public amid G20 meet, which is scheduled for today and tomorrow, and suggested alternative traffic movements for the ease of the public. Forces are keeping an eye on all sensitive and hypersensitive locations. While parts of India, which include Rajasthan, South Haryana, southern parts of Uttar Pradesh and the Gangetic West Bengal will reel under severe heat wave, and IMD has warned maximum temperatures are very likely to rise by 2 to 3 degrees Celsius over northwest India during the next 3 days and fall by 3 to 5 degrees thereafter.
And Saudi Arabia's first astronauts in decades rocketed towards the International Space Station on a chartered multi-million-dollar flight on Sunday. SpaceX launched the ticket-holding crew led by a retired NASA astronaut now working for the company that arranged the trip. Also on board, a US businessman who now owns a sports car racing team. And the state funeral of Queen Elizabeth II cost the UK government around £162 million or $201 million, the Treasury said. The UK's longest-serving monarch died on September the 8th, 2022 at the age of 96 at Balmoral Castle in Scotland. And in a thrilling display of sports, Virat Kohli's knock of a century was not enough to push the Royal Challengers to make it to the playoffs, as Shubham Gill outdid Virat Kohli, scoring his own set of back-to-back centuries. RCB's loss led to Mumbai Indians qualifying for the playoffs. Gujarat Titans will now face Chennai Super Kings in the Qualifier 1, and Mumbai Indians will now face Lucknow Super Giants in Qualifier 2.
Well, absolutely. GT looking unbeatable at the moment, Ankita, and Shubman Gill, another classic knock from him. But with that, we're completely out of time on this edition of the show. Of course, we'll see you tomorrow, but the market will take the action forward. From Ankita, myself, and everyone who puts the show together, thanks so much for watching.